Good morning, everyone. This is Beyond Dale with Aces Trading on another technical market update. Okay, what we're taking a look at is a chart of the SPY S&P 500 ETF. Now, what we can see is that the market is in a clear uptrend. So where the market is steadily moving up in a pretty uniform and balanced approach. And what's the reason that we take a look at charts? We take a look at charts because they give us a graphical picture of what is happening with a particular stock or ETF. So no matter what the media is telling you, you can easily take a look at a chart to see exactly what's happening in the markets. Okay, so we are currently in a steady uptrend, and this wave in this uptrend has actually started from November 2012, and the market has been moving up steadily ever since. And the broader uptrend started in April 2009, and the market has just steadily moved up. Actually, from the low of 2009, the market is currently up about 180% S&P 500. Now, what I commonly get in my email box from investors is, are we at a top? Is the market currently topping out? Well, to be honest, I have been hearing that the market is topping out for the last year, and the market just continues to go up in a steady way. The question is, would I make new investments right now? The answer is no. Because I believe the majority of the move is already behind us. And to be good investors, what we need to do is to figure out what's happening next. So to answer the question, the market is currently, there is no evidence that the market is topping out yet. What we see is the market still in a steady uptrend, and the market is encountering some resistance below the 200 level. What will confirm a short-term top is if the market closes below 195. You may see the market then move down to the 190 or even the 185 level. That will be a short-term move. If you see the market close below this low at 175 on the S&P 500 ETF, we could see a broader correction take place in the market, and the market may start moving down at that point in time. But until then, the market is in an uptrend, and if you are holding positions, well, what I am doing is that I am currently holding on to my long positions because I see no reason to sell just yet. Okay, another market of interest is IBB. Now, IBB is a biotechnology ETF that has done very well over the last 4 years or so. As we can see, just taking a broader picture look, in 2009 the market was at 60, and now it's currently at 254. So we have over 400% increase since 2009 and the IBB ETF. And what IBB is, the biotechnology ETF. It tracks the biotechnology sector, and it has done very well over the last 4 years. Now, what we saw was that the market in late February made a high of 275. Then we had a correction, and the market is now currently moving up again. So what is critical for this market is for it to eclipse this old high at 275. If the market goes above the old high of 275, we will see further gains in this market. We could see the market moving up to a high to test the 300 level or so. If the market closes below 240, I would be cautious, but I would not pull my longs just yet. It depends when you got in. And if the market closes below 220, I will definitely be starting to get worried. But currently the market is in an uptrend, and for those technicians here, this is a triangular consolidation pattern that the market could be entering. So we just have to wait and see. So what I believe for IBB is that if you are currently long, I would hold on to that long trade. Now, the other market that gets a lot of attention is gold, and I will just take a look at the gold cash index of what is happening. I know there are a lot of folks that have invested heavily in gold with an expectation for it to rise. But let's take a look at what happened or what is happening in gold. Over the last year, from a period of July that we can see here, this is the beginning of July, this is 2013, to July 2014. The market has not done much. In July 2013, it was at 1200, and in July 2014, it was just above 1300, with a high about 1430 and a low of 1150. So what we can see is that the market has not done much. We are currently in it has been in roughly a $200 range for gold. And that is pretty abnormal for the metal. So what's the next move in gold for those holding on to gold? In technical analysis, we call this a triangle, and the market is in a triangle, and a triangle is a consolidation pattern. So the market is currently consolidating. So the question is, will the next move be down, or will the next move be to the upside? Well, that answer depends on which way the market breaks out of this triangle. And this is one of the reasons why technical analysis is important, looking at price charts, because if a move is going to happen in the market, it will be reflected in these price charts. And what momentum traders look for is to see which way the market breaks. So if the market breaks above this triangular consolidation pattern, we could see a resumption in the uptrend in gold. If it breaks below 1150 or so, we could see the resumption in this downtrend in gold. And so that's what's happening in gold. And this is one of the reasons why folks need to pay attention to what's happening in the charts and not buy into a lot of hype and a lot of marketing. Because what happens is that, or what has happened over the last year or two, is that a lot of folks have bought into gold and nothing has happened, and they are getting frustrated. While something like the S&P 500, let's just take a look at the S&P 500 over the last, from the period of July. The period of July to now, to July, this market, S&P 500, has moved, this SPY ETF has moved from 160 to 190 or so. I mean, this market is definitely up over 20% from that period, while gold has done nothing. So that's why it's important to circulate your money into assets that are currently performing, and not buy and hold or buy and hope, because the gold position now is a buy and hold position. Now back to gold. The market for the bulls out there that wants the market to go up, gold normally performs well in July and August. So if the break does happen in August, we could definitely see the yellow metal rise. If the break does not happen in this August period and the market actually declines, that will indicate to me that this market is fundamentally weak and could decline further to the $900 level or the $1,000 level. Okay, so that's what's happening in the markets. Thanks for listening. If you have any questions, can send it to bion, BION, at acestrading.com. I look forward to your questions, comments. Thank you very much for listening.